Hello, this is Running Robert, and today we're going to be talking about the Esperion Therapeutics ESPR summary for the 25th of August, 2025. And in the summary, we're going to be looking at the bullish and the bearish parts of the company. So I generally follow small cap pharma. I do games, I do a little bit of everything. So if you like what I'm doing, hey, please like, subscribe, or super thanks. All of those help, and thank you. The disclaimer is I do own options at $2, and that is for the 16th of January, 2026. I bought them at $40 an option. I'm an amateur investor, and any advice given should be followed up by your own due diligence, and information given is valid for today, the 25th of August, and this slideshow will not be updated. But as always, new news, new slideshow. So let's talk about the company. So the company currently has two products that have been approved. They're both for cholesterol, so very similar market. They have plenty of worldwide partners for this product in countries other than the US, so they get a good amount of royalty payments, which is very nice. There is currently not really a pipeline, so they expect some stuff to start in the second half of 2026, so I am really not assigning any value to that. The company had 86.1 at the end of the second quarter, 2025, and the company reported a net loss for quarter two at 2025, but they were positive from operations, but they have semi-annual debt that is due. And so, it's close. If you cut that into quarters, it's only $10 million of debt plus 7 from operations, 10 of debt. So you're very close to that like break-even part. There is $280 million debt due in 2028. That is the big debt that we have. And then, of course, 146 in long-term debt, which is contributing to that 20 million. There's also notes for 2030. So the company has a market cap of 437 million. Oof, that's a lot of information. So what's next for the company? Why am I here? Why am I investing? Why am I making a video? So they have 80 million from their partner in Japan for approval. This is expected in the second half of 2026. This includes 15% minimum royalties, which go up to 30%. They also have plus 50 million for a successful trial for cardiovascular events. Again, I believe that is going to be a positive trial, so that's not a good amount. Company has fought off generic competition through several deals, which go until 2040. That if you were to look at this company 6 months ago, you'd be like, this company's gone. Like they are probably in trouble with generics coming in, but they were able to make deals, and really, I think the generics were like, hey, we can get a small piece of the pie at the moment, or we can wait and get a much larger piece in 2040. Like I do expect this to be a fairly successful set of drugs. The company does expect to be profitable in the first quarter of 2026. So, cash and operating expenses. So, company expects its operating expense between 215 million and 235. That does not include cost of goods. That is very important because for the 6-month operating expenses were 162 million. Without the cost of goods added, it's 100 million. So cost of goods is a pretty big share of what's costing them money, which they need to make, spend money to make money. That makes sense. Total revenue was 82 million. So it's 40 million from the US, 42 from partners overseas. 6-month, 147 million, 75, 72. So you see that this is, we see the growth. So it's very positive. So based on all of this information, I am really calling the total operating expenses and cost of goods between 320 and 340 million for 2025, with revenues between 300 and 320. And that is not counting the 80 million in the second half of 2026. So you're looking at a fairly positive cash breaking even company. But why did I just buy options? So the company has a chance to close out the year with close to $160 million. That's the 80 they have now plus the 80 they will get. And then with a market cap of 437 at a share price of 218, I don't see a double here. So I risked down and I really took options, which cost me $40 in options, currently worth $60 an option, because I believe the company could easily make $3 a share with approval and continued growth. So we get a good third quarter report, we get approval. $3 is very much an option, which means I'm making $100 for those options, and they cost me $40. So more than a double. We like that. The major risk I am taking is that approval does not happen in the second half of 2026. And that would pretty much shoot down my options at that point. But what do I say? I think this is a low risk company with low to medium reward. And that's really because I could see it doubling on options, but not really on stock. I don't expect this to go to 4 or above. 3 is a definite possibility, and that's kind of what I am shooting for. The major risk to my options is the approval. And I believe that risk is fairly low since this product is already sold worldwide. So looking at all that together, is it still like with $60 options, is this still something that's worth it? Probably. You know, 320 is definitely also a possibility. I don't think that is definitely beyond the reach of what you're looking for, but I'm going to stick with about $3 as a good low amount and go from there. So thank you very much for watching and listening, and I hope you have a wonderful day.